Alright, going into Wednesday, start from a daily chart. We can see the previous day's range here, which was a classic sell day that ended up finding a reversal inside the not the closure, but inside the PM session, right? Saw an expansion back inside of the range. We can see that the market is still holding the range of the fair value gap, which was the discount array of interest going inside Tuesday. This will still be important going inside Wednesday. We'll see what levels are around this range inside of the lower time frame. Okay, so still a very relevant level, having its quadrants, right, such as for Tuesday, if we look at Tuesday's price action around the quadrants of the BISI, I can see how the quadrants are used for reaccumulation of shorts. Eventually, once the order flow turns bullish, the quadrants are used to reaccumulate long positions and distribute from them. Okay, so still a relevant PD array on the daily, discount array obviously. We also have the previous day's rejection block. Sorry, right. This is inside this wick. There's some important PD arrays which we'll look at when we look at the 3-day look back. Look, in terms of a weekly profile, there's, in my opinion, high probability that the low of week has been formed, right? Consolidation, manipulation. So I think it's likely that today, Wednesday, right, ends up drawing at least towards the previous day's high. Not the previous day's high, but the current weekly high, so the high of Monday on a 2-day look back scale. If not even higher, right? But I think that this is the drawn liquidity for today. So premium array, in terms of discount array, the fair value gap is still relevant, and there is the rejection block, the discount rejection block left by yesterday's range. If we look at the 4-hour chart, coming inside the week, right, coming inside Monday, what I was saying is that we have 3 important levels, okay, where the potential low of week could be forming, right? If the market was going to be really, really bullish, either, right, of these fair value gap to hold price as support, right? What I was saying was that ideally it's going to be this one, okay, since it has an order block. And right, if we look at the previous week's profile, which was a classic buy, right, we can see that the final shakeout inside of that range before the final distribution on Friday was at these levels, right? It was done on Thursday. So this here is the relevant PD array, okay, for the weekly profile this week, right? Whether, you know, it was going to do this or say this. This is also our dealing range low, right? And so what did yesterday do? Traded to 50% of it and has found a lower time frame reversal from it. Okay, so this is important information for the weekly profile, and so far this is what's giving me an idea, right? A bias that it's very likely that the low of the week has been put in at these levels. If we look at the 3-day look back, okay, so we can see in the 3-day look back the previous day's range at these levels. Right now, this was a classic sell profile, okay, that ends up having a PM session reversal. This is something that I was mentioning coming inside Tuesday, right, was even if the market will be bearish today, right, what I was saying was that I don't think that it's going to be drawing towards the low of the dealing range. Why? Because there were key discount arrays inside of the range, and what I was saying was that if it's going to be some kind of sell day, right, watch out around the London close range. In fact, the market ended up creating the low of day inside lunch, right? 12 p.m. opens, makes a final low, and eventually the PM session reverses. So what has this range left behind? well, if we grade the previous day's range, what we can see is that at 75% of it, okay, so the upper quadrant of the previous day's range, this is where we find, right, we have a breaker at these levels. This here at the opening range was the final shakeout, right, before trading lower. We'll look at it on a 15-minute chart, so right, we'll see that at these levels there's a bearish order block that, well, the idea is that it's going to want to turn into a bullish breaker. So this is what's located at the upper quadrant of the previous range. At 50%, we find a balanced price range. Okay, this here, this fair value gap, in my opinion, very high probability that it creates the low of day. Okay, whether the market, has to trade at these levels, do some kind of double purchase and trade higher, or directly from the open, right? See some kind of consolidation, manipulation, and then trades higher from these levels. At 25%, okay, there's also a balanced price range, but ideally, if the market is going to expand today, I wouldn't want to see the market revisit this breakaway gap. Right, the best case scenario for me at these levels is the market sees a retracement inside the fair value gap at 50% of the previous range, and from those levels expand higher. Right, we can see also the market holding the dealing range. The dealing range is currently the 3-day look back low, but we don't have narrative, okay, to be targeting short at these levels. I think it's very likely very likely, because of the reaction that we saw in the previous day's PM session, that, right, the market's going to want to draw towards the relative equal highs of Monday and the previous day's high. Let's go down on a 15-minute chart. We can look at the price profile of yesterday's power of 3. Right, and this is what I was talking about at these levels. At these levels, right, inside the opening ranges, where we find that final shakeout that distributed price lower. So this 15-minute up close candle of 9:30 is going to be important for today's profile. If today is bearish for whatever reason, is very likely going to use it as a bearish order block. So far, there's a divergence at these levels. The S&P 500 is stronger. But the idea for me is to see this level becoming a bullish breaker, right? If the market revisits the fair value gap and then starts trading above from it, I would like to see this bearish order block turn bullish breaker, right? And hold price as support to trade higher. So this is an important level here. I want to keep the quadrants on all day, see if, well, it depends again, because say overnight price does this and New York opens at these levels, right? Then at that point in time, the speedy rate won't be too important in my opinion, right? Price won't have to revisit this range to trade higher. But, for whatever reason, if, price does something like this and eventually trades below it, right? And then you believe that the low of day is in, once it starts trading back inside these levels, you want to see the quadrants of this, which is what is currently a bearish order block, right? You want to see it hold price as support. Another thing that I wanted to look at was standard deviations, right? So if we look at the range of Monday here, right, and coming inside Tuesday, what I was saying was that the important PD rate, right, for the day was going to be this bullish order block. Okay, why? Because price here was inside of a consolidation, and inside the PM session, right, inside the final hour, saw a shakeout that led to a market structure shift. Okay, so, and in fact, you can see that the high of day comes from these levels. Right? Price sweeps the high of it and eventually starts claiming, right, starts claiming the quadrants of this bullish order block, okay, as a bearish breaker. Right, comes back here and eventually from there distributes lower. So in terms of standard deviations, right, for today, from the final shakeout here at these levels, right, you can see that price trades right inside terminus of it, and from there finds a market structure shift. Obviously, again, inside of this range, what did we have? We had the 4-hour bullish order block of interest, right, which is the PD of interest for the week. And if I can see the market trades perfectly to 50% of it, this aligns with the standard deviations, and from there break structure. So we could also use some standard deviations on this side of the curve now to map out the buy side, or at least to map out, sorry, the road towards the buy side liquidity, right, the relative equal highs in the range. I was looking at personally the final shakeout here before the market structure shift. So using the range of the order block, right, and then they seem to align. These standard deviations seem to align pretty nicely with the current buy curve that we have, right? Price coming to negative 0.5, creating the low risk buy. Price expanding towards negative 1 to 1.5 standard deviations, and at the moment is consolidating. So you know, if you see something like this, right, from these levels, price coming back inside of the range where there is a key fair value gap, okay, a fair value gap, a BPR left at 50% of the previous day's range, that is very good confluence, okay, because it happens at key standard deviations, right? And if we're thinking in terms of open, low, high, close, not only on the day but also for the week, right? This makes for a very good trade at these levels. You can see 2 to 2.5 leading towards the range of the previous day's New York session high, and also, right, what is currently still a bearish breaker at these levels, right? It's the breaker that sent prices lower in terms of the yesterday's profile. And finally, the terminus for this curve located at a new weekly high. Okay, now I think that this can keep trading, that this can trade higher, right? Higher than these levels if it's able to create a low of day early inside of the day, so in Asia or in London. I believe that there should be enough room to even trade past these levels, but this is a low hanging fruit target, okay? So I think that covers it, okay? We covered premium arrays, discount arrays, key level for the day, okay, being the final shakeout at these levels here, the 930 candle, right? The idea is to see this level becoming a bullish breaker if we're going to be bullish today. Another key level inside of the range, we have a fair value gap, we have a balanced price range located at 50% of the previous day's range, right? So crucial level, okay, in terms of open, low, high, close. Now, if the market is going to fail, right, say for whatever reason, is going to trade higher and then is going to end up failing, I can see the scenario of a consolidation. Personally, it's hard for me to anticipate that after this movement, okay, even if the market trades higher, it's going to want to reverse lower. I mean, everything is possible, obviously, right? If it were to reverse from these levels, then I would have to see failure, okay, inside of the 15-minute order block, right, that we were looking at, the shakeout inside of the opening range. I would need to see the market fail to displace this range. Again, currently we have a divergence at these levels, but I don't think this is enough narrative to look for shorts, okay, not until the market were to, say, take out these highs, sweep it, maybe the S&P 500 trades above the previous day's high while Nasdaq fail, okay, and this happens at a key time of day and is followed by a market structure shift. Now, maybe not, it's enough for a reversal, right? But if this type of scenario were to happen, okay, a sweep and a divergence at the previous high, a sweep, sorry, above the New York highs and a divergence with the previous high, then I think a low-hanging fruit for this type of scenario would be, I mean, it would have to be the BPR inside of this range. I'm not sure. I'm not sure how likely it is to see price take out previous low. Look, if it's maybe very extended or if the move is heavy, it might want to reach, okay, for this fair value gap, for this BPR, the one that's located at the lower quadrant of the previous range. But yeah, the ideal case scenario for me is to see this fair value gap hold. So premium rate, discount rate recovery, we looked at some standard deviations, we looked at the daily order flow, we looked at potential weekly profile development here from the 4-hour order block. Okay, so let's keep these levels on our chart. Let's analyze if this fair value gap is traded to, how is it traded to, at what time of day is it traded to. Okay, and also same for the order block, right? Coming inside New York, how did the market treat this bearish order block? Did it displace it? Did it sweep it? Did it create a divergence from it? And we'll take it from there.